Hello, this is Joe Pryor with the virtualrealestateteam.com in Oklahoma City, and I'd like to address the buyers and sellers both of distressed properties, those ones we know as short sales, subject to lender approval, that don't go into foreclosure, and then also the ones that do go into foreclosure. Now, in both cases, it is typical that these properties are purchased in an as-is condition. And so if we get those pristine properties, then, don't need any work whatsoever, then it's really not a problem with financing. In fact, honestly, I think short sales, for instance, have gotten a bad rap. If I look at all the short sales we've been doing here in the last year to 2 years, almost all of them have been in move-in type condition. They may need a little bit of work, some cosmetics, but nothing major. However, we do have those properties that need a lot of work. I mean, if you have a distressed homeowner who is doing a short sale workout or let their house go into foreclosure, it's a pretty safe bet there wasn't the money there to take care of some things. So maybe it's a roof, and that roof is a $10,000 to $15,000 fix, or maybe the central heat and air is not working properly, or maybe the kitchen is really in bad need of being updated. I mean that it's just really old and starting to get worn, or a pool needs to be taken care of. A lot of people at that point will just kind of cut and run. I have seen sellers that I've talked to that says, well, my house is really not in good enough condition to be a short sale. Well, that's going to be shown to you to be incorrect today. As well as buyers going, well, I tell you what, that's a smoking deal you've got there, but I just don't have the money to put $15,000 or $20,000 into the loan, into the property on top of the loan in order to get those things fixed up. And a lot of times FHA or VA will not let you buy properties that have over $5,000 worth of work needed to be done. They're considered uninsurable, or that the VA can't guarantee it. So what do? Well, the old traditional way was what's called a FHA 203K loan. This is loans designed for uninsurable properties. This is when, you may need $50,000 worth of work, and FHA, again, like I say, if it's over around, I think, $5,500 at this point, then you have a problem. So what it was designed to be is where you could purchase the property, use a general contractor, the general contractor would then subcontract, and in a couple of draws, then you would be able to get the money that you needed to take care of all those capital improvements, or even things like maybe putting a washer, dryer, and refrigerator in there, or blinds, things like that can be added to absolute things that need to be done. The problem with the 203K was, and still is, it's fairly complicated. Now, it's better than it used to be. It used to be just awful, but now it is something that's worth going into. But if you don't want to go into that kind of a problem home, what else can you do? Well, number one, there is a loan called a 203KS, or Streamline as it's called. Now, two things about the 203KS. First of all, you can have no foundation problem. So if that's got to be taken care of, it's in the regular 203K. The second thing is that it is limited to $35,000 in terms of the work that you need to do. Now, in my short sale experience, or even in selling foreclosed properties, that's really enough to take care of what you need to do. That's a lot of money going into a basic $100,000 or $150,000 or maybe $200,000 property. But there is also another variation on this, and it is a conventional version. Now, in conventional, of course, you need to have better credit. You've got to put more of a down payment down, whereas, of course, FHA is 3.5%. So a conventional is a way to go if, again, you wanted unlimited amount of repairs, maybe a very expensive home, and that with the money that you put into it, it really does become a dream home. Because let's face it, a lot of times we buy a home that's in really excellent condition, very, very good condition. We pay a nice price for it, but then it's not exactly what we want. Maybe we want a light granite versus a dark granite. Maybe we like green versus blue on the walls. Maybe we like dark woodwork versus light woodwork. Whatever it happens to be, the ability to personalize your house is what makes these loans really, really good. And in my experience, the basket cases, if the bones of the house are good, if the structure is fine, if basically it is a question of central heat and air, roof, and some cosmetics like flooring, etc., then if that price is low enough, and they typically are, these are usually the best deals out there. So if I can get a property at $100,000 and I put $30,000 into it on a 203KS or on a conventional loan, and that property becomes a $180,000 or $200,000 property, I've made 2 wins out of this. Number one, I got a great deal. Number two, I've made it exactly the way that I want. Plus, I can add some things in there that maybe, I didn't want to pay cash for, like $1,500 worth of blinds. So, if you're looking at short sales or distressed properties, either as a seller or a buyer, my recommendation for you is don't despair. Look at the value. As I've always said, and I know this sounds like a cliche, but everything sells and everything has a buyer. It just may mean that the price has got to be right. So if you're looking for these properties to sell or to buy, please call us at the Virtual Real Estate Team. We deliver traditional real estate values with the speed of technology.